This is a 2018 paper which is worth 5 credits, so worthwhile going through this and getting it right. This is for workout work, so hopefully you've opened this file here, and we've got sad faces here that'll go into happy faces when we classify things correctly. So on your screen you should have the assessment here, and over this side is the adjustments that we're going to make to the financial statements. First thing that you have to do is to do the adjustments over here, put the additional information into the trial balance. Second thing we have to do is to classify the trial balance. Third thing, the income statement, and then the balance sheet. This first video is only on the trial balance and classifying them. So we'll do that first. The second video will be on the income statement, preparing that, and the third video will be on the balance sheet or the financial position from last year's exam. So what we're going to do is start with the additional information. This is part of the resource that you get in a separate resource book. We're going to do one at a time. If we're doing this on paper, we would tick off each one of these as we complete it. On Excel, it's nice. You can see down here they balance. You won't get that opportunity in the end of year exam, unfortunately. So the first adjustment we're going to do is office expenses paid in advance, 320. So find your office expenses. Because it's paid in advance, we have to take it off. In advance means take away. I'm going to take it off by putting a formula up here, minus the 320. You'll see it totals down here for us as well. So expenses paid in advance are called prepayments. So we'll write prepayments. And the amount we've paid in advance is 320. The second thing that we're going to look at is interest owing on the loan balance date. So interest owing on loan, it's an expense owing, so it's called accrued for owing, and expenses. The amount owing is 320. So what was it owing for? It was owing for interest on the loan. So we're going to add it. If it's owing, we add on and add that 320. Hopefully you balance down the bottom, yes and yes. So I will have ticked the first one off, tick the second one off. Press pause if you want a chance just to catch up. Next one, equipment hire received in advance. So this is revenue received in advance, so that's what we type, it's a liability. Type this in on yours. And that's 850. Because it's in advance, we mean take off. And what was it for? Equipment hire. So this equipment hire, some of that equipment hire, 850, belongs to next year, not this year. So we take it off. And again, just check we balance down the bottom. Depreciation on exercise equipment, 5,400 per year. So we've got to type it in. Note that we can't shorten it because in the assessment here it tells us, oh, I can't find it, we're not allowed to abbreviate. 5,400. Okay, depreciation on exercise equipment, so we find it up here. We add it on the left hand side, we need to add it on the right hand side. Plus, I find it easy to click. And again we balance. Next one is depreciation on gym fixtures and fittings. Again, don't abbreviate. And that's calculated at 12%. So type equals, find your gym fixtures and fittings up here, and times 12%. All right, 4992. So we're going to add it to accumulated depreciation on gym fixtures and fittings. Good, balance on the bottom. Add left, add right. Next one is depreciation on office equipment. And that is an excellent question. It tells us that it has a useful life of 10 years, residual value of $700. So type equals, open your brackets up, because the exercise equipment, office equipment is at $6,200. We're going to minus $700 because that's what we're going to get for it at the end of its life, and 10 years, so we divide it by 10. So equals cost minus the residual value divided by the number of years, 550, and we'll add that to the accumulated. So the last two we've just done are excellence questions. If you get them right, you get excellence in 2 spots: the income statement and the financial position. Note again it balances. Now we get to these ones. Now these ones have got GST in them. They're accounts receivable and accounts payable. First one is an invoice received. So that means that we have received an invoice, we owe it to other people. And you remember that's accounts payable for the full amount, 5543. Again, an excellence question. What was it for? The new exercise equipment. So exercise equipment. So we're going to add it on, but the tricky part is because it has GST, we're going to take the GST portion off. So we're going to add on the 5543 divided by 1.15. That'll take the GST off for us. Still haven't finished because there's a GST component in it. So for the GST, because we're buying equipment, it means we get to pay it back. Put an equals before, and we're going to minus, because we'll owe less GST, 5543 times 3 divided by 23. On the paper, normally you just take this 5543, and remember we split it between the two. That times 3 divided by 23, we did that earlier in the year when we did our cash journals. And we'll see that it balances down the bottom. Tick that one off. Last one, invoices issued. So that's accounts receivable for the full amount. And that was for membership fees. So find your membership fees. Put it equals in front of it. We're going to add on the 1656 divided by 1.15 without GST. And then the GST, because we should receive it, we owe more in GST, 1656 times 3 divided by 23. And do we balance down the bottom? Beautiful. Right, now we get to classify. Classify, this one's actually an easy one because we don't have cost of goods sold. So in the question on the exam paper, it tells us to classify the expenses as gym cost, admin expenses, and finance cost. So start up the top and we'll type GC, advertising gym cost. Note that it goes to a smiley face. Drawings, owner's equity, exercise equipment, PPE, fitness instructors' wages. Goodwill is an intangible asset. Remember, intangible is we can't touch it. It's a reputation. Gym cleaning, gym fixtures and fittings is an asset. Gym rent, gym supplies on hand. It's a current asset because we haven't used it up yet. Gym supplies used, interest on loan, interest is the only financial cost. Office equipment, office expenses, all office stuff's AE. Other gym expenses, petty cash, money in the till. Shares is an investment asset. We've got money sitting aside somewhere. Ooh, don't know why that's wrong. We'll fix it up later. Stationery is admin expense. Telephone admin. Prepayments, current asset. depreciation on exercise equipment, depreciation on gym fixtures, and office becomes A, lastly accounts receivable CA. Over here we've got press space before you type minus PPE, and that's the same for the next three. Bank overdraft, current liability, we owe that back to the bank. Capital, OE. Dividends received, OI. OI, another income coming in. GST is current liability. Loan, check the date. Date tells us it's non-current liability. This is our major form of income. You can see because the amount's so high, so it's income. CL, CL, and CL. Done. So that's the first part. The next part we're going to go to is the income statement. I'll fix this part up here before you get to it, but just stop there, check you got it right, and then we'll get on to the income statement.